Hi, this is Priyanka. Welcome to Goldstone Finvest. Time for daily market updates. Today, Thursday, the day of weekly expiry. Indian markets remained resilient despite restrictions kicking in Maharashtra and Delhi announcing a new set of curbs to stem galloping coronavirus infections. Investors took comfort from the fact a lockdown had been avoided. A continued surge in COVID-19 cases had dented investors' sentiments. However, the government's strong effort to expedite vaccination progress in the country by allowing multinational vaccines in domestic markets and the absence of complete lockdown in Maharashtra offered some comfort equities. The S&P BSE Sensex remained volatile, but bulls managed to regain control. The index rose by 259 points to 48,803, while the Nifty rose 77 points to close at 14,581. One more positive session was witnessed today as the index ended the day at 14,581 with gains of more than 0.5% and formed a bullish candle for the second consecutive day. The index formed a good base near 14,460 to 14,350 zone. The benchmark Nifty closed in the green on strength in late trade amid volatility, even as traders turned cautious due to increased restrictions in several states to control the coronavirus spread. Banking and financials, metal, pharma, and select IT stocks helped the market close higher. After opening higher at 14,522, the Nifty failed to hold onto it and slipped to an intraday low of 14,353 amid volatility. It gained strength in late trade to hit the day's high of 14,597 and settled with gains of 77 points at 14,581. The Nifty formed a bullish hammer candle with long lower shadow, indicating declines were being bought. The index formed a bullish candle, which resembled a hammer pattern on the daily charts. Experts say 14,300 is expected to be crucial for further downside, while the upside seems to be capped around 14,650 to 14,700. The hammer is a bullish reversal pattern formed after a decline. It consists of no upper shadow, a small body, and a long lower shadow. The long lower shadow signifies a bounce back after testing support where demand is located. The Nifty's smart recovery hints that bulls are trying hard to chalk out a near-term bottom around 14,300 levels. Considering the fact that the Nifty has successfully defeated its 100-day moving average, whose value is placed around 14,300 levels, a short-term bottom can be in place around these levels. A fall towards 14,350 can be a good opportunity to buy the dip as long as 14,300 is not violated on the closing basis. Upsides may get stretched into bearish gap zone present between 14,652 to 14,785. India VIX moved up by 2.10%. On the data front, BPI inflation coming in at an 8-year high of 7.39% and the rupee hitting a 9-month low of 75.32 are hinting at inflationary pressures and foreign outflows in the capital market. The options data indicated that the Nifty could trade in the range of 14,250 to 14,850 in the coming sessions. On the options front, maximum put open interest was seen at 14,000, which was followed by 14,500 strike, while maximum call open interest was seen at 15,000, followed by 15,500 strike. Call writing was seen at 15,200, then 14,900 strike, while minor put writing was seen at 14,000 and 14,500 strike. The Bank Nifty opened positive at 31,929 but got stuck in the range for most part of the day and was facing hurdles at 32,100 levels. The last hour saw a positive momentum and the index closed with gains of 341 points at 32,112 levels. The banking index continued to outperform the broader market. It performed a bullish candle on the daily scale with a long lower shadow. The market is becoming more cautious as states increase restrictions due to havoc created by the COVID-19 virus. Growth-oriented sectors and the stocks are losing momentum, while defensive stocks like pharma, FMCG and IT are gaining. States, however, will not opt for a complete lockdown like last year, but high valuation will lead to a phase of short-term consolidation. Sectors buying was seen in metals, banks, power, energy as well as oil and gas stocks, while profit taking was seen in auto, consumer discretionary, realty and FMCG stocks. Auto stocks were worst hit today mainly due to the wider economic restrictions which were imposed in the states of Maharashtra, which contributes over 20% of the automobile production of the country. Infosys also witnessed heavy profit booking after missing Street's estimate in Q4 of financial year 21 earnings. Let's see what experts suggest investors should do tomorrow, that is Friday. Experts suggest that if the index manages to sustain, it may move towards 14,700 to 14,800 zone, which is the immediate and strong hurdle on the higher side. The overall range for Nifty would be between 14,250 and 15,000 levels on the higher side. Nifty has to decisively hold above 14,500 for an up move towards 14,700 and 14,850, while on the downside support exists at 14,350 and 14,250 levels. Banking Nifty has to hold about 32,000 levels for an up move towards 32,500 levels and 32,750 levels, while on the downside support can be seen at 31,500 and 31,250 levels. As stated by Goldstone expert, traders should trade extremely cautiously with strict stop loss and should follow support and resistance level on strict basis. Traders with long side exposure should book profits in the level of 14,650 to 14,700 levels in the next trading session. The current dips are an opportunity to add large caps from the banking and IT sector, while market remains bullish on the capital goods, technology and digital space. Technically, the Nifty can play in 14,200 to 14,900 range. Follow support and resistance level along with trading call as published on a Telegram channel. For regular updates, please like, share and subscribe to our YouTube and Telegram channel. Also follow us on Twitter and Instagram. Be a part of Goldstone family on Facebook. Views by Goldstone Finvest. Let's build fortune together.